Good afternoon, ladies and gentlemen. My name is Shane Squark, and on behalf of the Market Technicians Association, I'd like to welcome you back to another webcast as part of the MTA's educational web series. Today, on September 12th, 2012, I'm joined by Mathew Verdouw as he presents an introduction to Gann Square of 9. With an honors degree in computer systems engineering and seeing a place in the market for a quality technical analysis software application that removed the limits on how traders wanted to analyze the markets, Mathew started Market Analyst software in 1996. Since that time, he has dedicated himself to learning about technical analysis with a bias towards the traditional and esoteric works of W.D. Gann and his contemporaries. One of the key mantras around Market Analyst software has always been, "We are not the experts, we program what our clients need." It is with that mantra that Mathew spent time with many of the modern, most sought-after experts from around the globe, dedicated to develop into market analyst techniques that would assist his clients. As always, we do welcome your questions throughout the entire presentation. However, in the interest of time, we will not be able to address them until the very end. As a reminder, your participation in today's live webcast does qualify you for 2 MTA continuing education credits, which will automatically be added to your account if you registered online through the MTA shopping cart. And at this time, it is my pleasure to introduce you to Mr. Mathew Verdouw.
Wonderful. Thanks, Shane. Thanks so much for that introduction, and welcome everybody, and thanks for tuning in. All right, so Gann Square of 9. We'll just get straight into the material there. Now, as Shane has said, my whole approach has always been that I am a computer systems engineer first and foremost, and it is with that mindset that I've gone around the world and learned from people who I would deem to be some of the experts in Gann and Square of 9 and those types of techniques. And I'll have a couple of their names at the end of this presentation for people who want further information. But in the unique position that I have, I've been able to learn a lot of things, and a lot of that is what I'd like to share with you today as we go through this seminar. So a couple of things that we'll be talking about, the history. Gann, I do a little bit of coverage on who Gann was and how he came about knowing about the Square of 9 and the uses that we have for it. Then we'll be talking about how we use it in price, how we use it in time, putting them all together and the golden rules, which I think apply to a lot of Gann techniques, not just the Square of 9. And then some further information and a special offer for MTA members only. So, about me, I think we've covered pretty much everything there. I think one of the things that I would stress is that I love technical analysis. I love Gann. I love the combination of time and price and seeing things just come together that you wouldn't otherwise see. And the things that just don't really make sense. But you just see them happen time and time again. I just love that type of stuff. And so this is, for me, a passion. And I'll just keep continually developing ideas because it's what I love to do. Obviously, with any type of presentation like this, we have to have a bit of a disclaimer here. So just for the sake of the legal compliance department, let me just read out that obviously this information is provided for education only. There is no warranties provided with it, whether it's accurate or whether it's fitness for any purpose. If you're going to take any of this and start trading from it, you should do so in consideration with your own independent financial and professional advice. So we'll just cover that off. All right, who was W.D. Gann? I think first and foremost he was a mathematician. He was somebody who just loved the markets. He was selling cigars on trains in Texas in the 1800s when he started hearing businessmen talk about the markets, and that piqued his interest. And from there he went on to join a stockbroking firm and just studied charts. But more than just studying them like most people obviously at that time were doing, he then went on to look in detail at the relationship between time and price. and he believed that there was an interconnection between time and price, but also in the rest of the world. And he started seeing parallels between markets and between other aspects, so be it subatomic chemistry, physics, and other disciplines. What he did in the 1900s is he actually obviously had his interest piked about some of the more ancient mathematical and ancient philosophies. So he took some time off and he went and spent a couple of years in Egypt and India. And it's on his return from that expedition that he first started writing about his square of 9 technique and his cycle charts. And so we're led to believe, because he never actually said it outright, but we're led to believe that it was during that expedition that he found out about this whole technique. And so the square of 9 was one of the main discoveries of that. So here are a couple of examples. In the ancient world, there's lots of places where you'll see circles and squares and the intersections of those. This one here on the right is out of an Indian temple, and it's just this theme of squares and circles, and we've got the 9 squares in the middle. And you know, we can only speculate that this was one of the key things that he saw and he started applying to the markets. And you can even see here on the left this logo that he actually used himself for his own company. Had the intersection of a circle, a square and a triangle, the 3 basic building blocks of geometry. So there's a point of clarification that I need to make right from the outset, and that is that in reality what we know as the square of 9 now is probably not what he actually calls the square of 9. He would have called it a spiral chart. When you read through his notes, his marketing material and his coursework, you'll see reference to spiral charts and wheel charts and the wheel of 9 and things like that. But very rarely did he actually call it a square of 9. In fact, the square of 9 was actually a 9 by 9 grid, and I have an example of it here. So this is actually what he would have called. Now, for the purposes of what we're going to do today, we're still going to call it the square of 9. It's what everyone is mostly knows of this whole technique as. But I think if we're going to be pedantic, we would have to say that it actually isn't what he called himself, but nevertheless it's still a very powerful technique. So we'll just keep going with that. Here we see on the right the traditional square of 9. So basically we start usually with 1 in the middle, and we can go around clockwise, and you can see that we're increasing numbers. So we have 2, 3, 4, 5, around to 9, and then we progress into the next level and then go around again. And so this type of calculator, the best way to imagine it is like the pyramid here on the left-hand side, where we have 1 at the top, then the next series of numbers, etc., going down. And it's like we have a bird's eye view of the pyramid as we look at it. Now let me just change to that slide. One of the main uses of the square of 9 originally was using it as a squares and square root calculator. So what you can see, I'm not sure how big this is on your screens, but you can see the numbers here: 4, 16, 36, 64, 100 and 144. They're all our even squares: 2 squared, 4 squared, 3 squared, 6 squared. I'm having a brain fade at the moment. 8 squared, 10 squared, and 12 squared. And then conversely here, we can see our odd squares. So 3 squared, 9, 5 squared, 25, 7 squared, 49, 9 squared, 81, etc. So this was a way that it was very easy to visualize and just say, well, okay, if I've got any number, I can very easily find the square roots and the squares of that it was a very simple calculator for people to use. As we rotate around the square, we're alternating between the square roots. So we're starting at 1, we have 2 squared, 3 squared, 4 squared, 5 squared, etc., as we keep spiraling out from the center. So it was a nice, easy way for people prior to calculators to work this out. Now, in the use of a square of 9, and we'll get to lots of examples shortly, the angles are probably what is most important, because what we're looking for is relationships between numbers. And this is I guess, a common thread in the work of Gann, is the whole study of cycles, but the whole study as well that the actual numbers are important and there is a relationship between numbers. Now, one of the ways that we can do that is here with the square of 9. We can find numbers in the grid, and then we look around and we find another number 90 degrees around the square of 9, 180 degrees, etc. And there's a number of angles which we'll cover shortly, which Gann marked as very important ones to consider. When we are looking at a square of 9 like this, though, there was one set of angles which is most commonly known as the cardinal cross. And that is basically the north, south, east, west angles. And you see them here highlighted in yellow. These are important numbers. And as you go around the market and you study different charts and you apply tools like this, it is uncanny how many times you see numbers like these stopping the market. And I'm going to be the first to put my hand up and say, I can't tell you why. I don't know why the markets behave like that. All I guess I really care about is that if I can derive an advantage out of knowing this, that I most certainly am going to take advantage of it. So let's go and have a look in the markets. One of the first things that we're going to have a look at is what we call the static number series. That's where we just take the numbers that are on the square and we convert them into prices, and we just look at some examples of that. Okay. Obviously for these examples I'm using Market Analyst, but the techniques can be used with a calculator and a pencil. You don't need to use software for that. But let's have a look at some here. So this one here is actually Facebook, a shining star of the IPO success, if ever. What we have is just looking at a segment of the market from August 13 until just a couple of days ago, where we've had a big run down. Now, I'm not picking a starting point for this tool. All I'm doing is writing lines at significant points on the market, and so on the square of 9. So if I come back, let me just come back to the square of 9 here. I'm just finding numbers from around here and drawing them on the chart, and that's all this tool does. 60, remember we talked about cardinal, is important. It stopped the market on this number. Now, an important little digression that we probably need to make at this point is that you can see that I've put here that we're running a price unit of 0.1. What that means is that I'm actually not looking for 17.6 on the square of 9, but I'm actually looking for 176, and I'm working off that number. I guess as a bit of an explanation, anything to do with Gann, so if you ever study Gann, if you ever work with Gann, probably one of the most critical things that you're going to have to master is the knowledge of the price unit. Now with Gann, we've all seen the Gann fan, which looks a lot like this graphic here, where there is a 1 by 1 line. That 1 by 1 is often called a 45-degree line. But unless you're using graph paper, it's not always going to be a 45-degree line. What we need to think of is that for 1 unit of time, which for most of us, on most of our charts, is going to be from one bar to the next. So 1 unit of time, we have 1 unit of price. Now in this previous example here, for my unit of price, I said 0.1. It's a very common theme that you're going to do time and time again if you ever do any work with Gann, because without having the time frames correct, the tools just won't work. And the thing that makes it almost half art and half science is that that number can vary between different equities, depending on what trading range they're at and the tool. So it's one of those things that with experience, you get to learn how to pick the right price unit for that security. All right, so back to here, we've got 360 degrees here. You can see the 180 degrees, and you can just see the points, even here at 120, where the market bounced off. Now this shows a lot of the angles that Gann had said were very important. So the 45 degrees, the 90, the 120, the 180, the 240, the 270, the 315, and obviously the 360. Where those angles come from is dividing the circle into 90-degree intervals and 120-degree intervals, and the first two 45s. If we go back, well, I won't go back to it now, it's a number of slides ago, but if you remember that graphic of the square and the triangle inside the circle, that's where all of these angles are coming from. All right, let's keep moving on. So here is where I'm showing on the square of 9 where all these numbers come from. So you can see that we're starting our 0 degrees to the west. Now, there are different schools of thought on where that technically should start, and even on the rotation, which way the rotation should go. That's fine. Modern software lets you pick the starting point, the starting direction, and the rotation. At the end of the day, it doesn't make any difference to the calculations that we're doing. So what we've got here, 176, we can see from the bottom here. Then 45 degrees around, we've got our 183, which again, because of our factor, is $18.30. And then we keep going around. Now obviously these ones here, which are green, aren't so obvious to pick. It's not such an easy number to find. But you can see that the software is able to get an exact number. 194.7 is what it would have picked. And I'll show you later how we actually do that with a mathematical formula. And then we continue around in one whole rotation, and that's what we have here going up on this Facebook chart. And again, just to reiterate, we're not picking a starting point. This isn't a tool which is calculated from the opening price on Facebook. This is a tool where all it is doing is drawing very static numbers with no consideration at all to what that underlying security is. And that's why I just love it, because I just find it so amazing how it has an influence. All right, rotation. The key is the rotation, particularly as we expand and contract, and I'll talk more about that shortly. We've just got to understand that as we go around the square, we're rotating. So from here, we're coming around to 9, and then we go to 10, we go around again, and then we just keep rotating around these squares as we expand. Future highs and lows are quite often can be found by rotating through a number of cycles. So this was an interesting comment from the Gann, in his writings in the, I'm just trying to read my notes. The circle of 360 is the most important for time cycles and price resistance. And it's something that he kept coming back to again and again. Now, obviously, let me just again digress. Gann wasn't right 100% of the time. He had obviously a ticket and Digest interview in the early 1900s where he had a phenomenal success rate of 198 successful trades out of 226. A fantastic win rate, and this was with a witness watching on as he was doing that. But not all of his forecasts were accurate. Half of his success definitely came down to very strong money management rules, and he was obviously very good at that as well. But nevertheless, he did talk a lot about cycles. He did talk a lot about how the price and time can be worked out with tools like this, and it's an advantage that we can have. All right, let's have a look at another market. This is the US dollar against the euro, daily bar chart. And again, all we're doing, now obviously the factor on this one is, I think it's 0.001, I actually didn't write it down. But you can see here again how those numbers, with no consideration to a starting point, are significant, and how the market seems to treat them as support and resistance. So you can see all those red marks that I've put above and below, just showing some of these interesting points. Now, again, there are some lines there which aren't being considered, but for the most part, you can see that more are than aren't, and so it's a very powerful tool to have in your arsenal. I'll just let you examine that chart a little bit more before I change, because there's a lot of turning points on there, and it really does highlight the power of this tool. All right. Here is another one. This now sort of more shows the expansion. So obviously we've talked about angles and how important they are. What I've done here is then taken Apple, put the static tool on, and remember, as we're cycling around and looking at these angles, what we expect to see, because the square's getting bigger with every revolution, is that the distance between our angles in price is going to become greater and greater. It almost looks logarithmic, and that's what you can see here. So this is, the red lines are 180-degree lines, the blue lines are the 360-degree lines. And you can see how it's just expanding and expanding, getting bigger and bigger as the price goes higher and higher, and as we are traveling around the square of 9. Just as a contrast, I have what a logarithmic chart would look like. So you can see that it's not quite logarithmic. If this was a logarithmic scale, if it was a logarithmic calculation, I should say, you would see these now being even, now that we've made our scale logarithmic. But because it's not, we know that it's not, it's probably more like a log 2 or a natural log, but that's something that I haven't verified yet. But more of an inkling I've got from looking at the way the relationship works. All right, let's have a look next. So, remember before I spoke about the formula. If we had to go around counting boxes, even with a computer program, and you're talking about the Dow, etc., being up around 14,000, that takes time. It takes a considerable amount of time. Fortunately, what we have is a formula that makes that really easy for us and can be used on any program. So again, obviously I am Market Analyst, and I like everyone buying our software, but you don't need to. If this is a technique you want to use, you just grab a starting point, a major turning point in the market, and you apply this calculation to it, and you can come up with some levels that will give you these square of 9 prices. So what we can do is we can start with our starting price as X, and then we add to it our angle, be it 360 or 180, etc., and we divide that by 180 and square the result, and that gives us our new price. Now, for those that are familiar with trigonometry, you'll know that the 180 is equivalent to pi, and so it really is a radian angle that what we're using here. So for a full rotation, we would put 2 in. So 360 degrees will give us 2, which is the equivalent of 2 pi. So X starting price, Y is the price that we're after, and alpha is our angle. So if we do a simple example here, we put 9 in, and we want to do one revolution around. You can see it's 3 plus 2 squared, which is 25, and we can see how that works there. Now, because we have this formula, we can now start our square on any price, and we can find any value on the square. So it may be 30 or 40 revolutions away from the origin, but we can find that price and then find out what all the angles would be around the square as if we had a massive square and we're plotting it all out. So let's go and have a look at some examples of that. Taking it to the next level. All right, so the first one we have here is the S&P 500. Now this is coming off the low of 666 in March 2009. And so what we've done basically is find I've just got to check, we've got a factor of 10. So what I'm looking for in this one is I'm finding 66 in the square and then working all of the angles out from there. And again, we can see that there's some significant points. This top here coming in, and we've broken through in the last couple of days, but it'll be interesting to see whether that holds. But you can see these resistance lines and support lines continually being tested and holding all through here. And this is obviously the one revolution gets us to there. Obviously, I think one of the most important angles is the 360 degrees, and so it's one to watch out when this market comes up to 360 degrees and see what happens around there. All right, let's look at another example. This one here, Microsoft, off the recent high in March 2012. I've added an extra couple of lines here. You can see the 135 and the 225 that I've added in. Again, it's a one-day chart, but we're going from the top instead of from the bottom. So this technique works both ways, whether you're going up from a low or you're starting at a top and you're going down. If you're going down, all we do, if we come back to our formula, is instead of the plus, we would do a minus in there. Because instead of adding to the number 2 for a full revolution, we would subtract 2. And that way we are contracting rather than expanding. Let's go back to that page. So we've got that chart there. Again, it's a great example, just sort of showing the support. You can see the 240 degrees is pretty much right on the money on this one. And then the run up comes back up to the 90 degrees. And so, again, a number of great little support and resistance points coming from that. All right. This one's a little bit different. What I've done here is, and this is going to fly in the face of all the people who are talking about a wonderful Dow comeback. This is the Dow valued in gold. So in the software, what I can do is I can just change, instead of valuing a security or a commodity in terms of US dollars, I can actually value it in Australian dollars, in British pounds, in euros, or in this case, in gold. And so what we see is that from 1999, the Dow has been on this slide. When you consider the Dow in terms of gold. Really the best way to paraphrase it is to say how many ounces of gold would it take to buy the Dow, and that's really the value that you would have. So what we see here, and I guess the reason I chose this was to prove that even in what we could deem as a synthetic market, these principles still hold. And we can look at these levels. Now, again, if there's a breakthrough like this that we're looking at right here, I don't deem that necessarily as proving that the line doesn't hold. There's times on Fibonacci lines or any technique I've seen where the market pushes through. There's a rapid push through, but it comes back within a couple of days. And I think that still deems that to be a valid line. And you can just see the points where it just keeps bouncing off these lines. And we continue down through here, here, and then still. You know, we're talking now from 1999 to here, so we're talking 12, 13 years later. This is still significant lines. Now, what we could do is go to every major turning point and add one of these series and cluster all those lines up. And where we get lots of overlap is obviously going to be very significant. But for the purposes of the exercise and explaining how the square of 9 works and is used, we didn't want to do that. All right, so let's take another example. This is just the Dow, this time in US dollars. Again from the top, just taking that first little rundown and having a look. So we take the price at the 14,200. And what we've done is we've applied a factor of 10. So what I'm looking for, and for some reason my images have just gone a little bit skew-if. What I've got in here is the 1273, which is my my secondary point as we come down, and above that is the 1420 that we're starting with. So what we've done is we've got our starting point here at 1420. Remembering we're using a factor of 10, so I'm taking one decimal place out of it. 1410. One revolution down, so we're going 360 degrees anti-clockwise around the square of 9, and we come out with 1273, which is this point here. Again, you can see just these examples, and I don't have to go searching hard to find examples. I can open up pretty much any security and be able to apply these, and sometimes it's a little bit of work with what's the price unit, what the correct unit to use is, but for the most part you can find examples like this in any market. Again, an example of using a live chart. We've got a 15-minute chart here coming in from Bloomberg, and this was yesterday. Grabbed a low from here in the morning, and we can see again how even on these real-time markets we're getting support and resistance lines coming up. It always amazes me when you see the market just rocketing with momentum and then suddenly just halting on one of these lines. It's a bizarre thing, but again, I love it. All right, next one. Okay, so what we have here is a cluster. What I've done is, this is the same chart that we had before with this starting point, but now I've added 2 extra. So I've got a blue one. I've kept them all the same color this time, so it was easier to see the differences in what's going on. But what we're looking for here, what stands out to me immediately, is how there's a clustering of these 2 lines together. That becomes, you know, very important and sort of starts ringing alarm bells that, hey, there's going to be major support and resistance where multiple tools or multiple calculations are coming in together. And so, again, it's a very important thing. So what we've done there with all these examples, again, if you imagine the square of 9, like this case here, we've found our starting price or our turn, or whatever our turn is, we've found it on the square, and then we've done our angles from there in either direction to get our results. But another technique with the square of 9 is that we can actually put those turning points into the center of the square of 9, and then we can look at angles from there. So a couple of examples of that again. So this is that 15-minute euro. Again, it's got a factor of 0.01 this time instead of 0.001. Reason for that is that because I'm not traveling so far around the square, I don't need to have such a small factor. I can bring my factor up by 1 scale of 10. That's what I've done here. Starting at the bottom, you can see here the 1.2755. With that factor, it's 1275 is the number we want to start with on the square. And this is the property. So if anyone there is actually using Market Analyst, this is the property that you need to tick to achieve that. And again, we can see what's happening. We can see how this market's bumped right up against 240. So funnily enough, this is the same slide that we were using earlier. And you can see here, this is the euro dollar. And then as I've gone along making these slides, you can see what's happened. It's bounced off here, gone all the way up, and then stopped short right on the 240 line there. And, you know, with any type of Gann line like this, is it a certainty that it's going to stop? No. You know, it pushed through this one, it pushed through that one. But with anything, if we see a change in trend following touching one of these lines, then, yeah, that's a confirmation. But, of course, sensible money management rules need always apply. All right, let's have a look at the next example. Oh, sorry, this is the same one, just again showing the square of 9. Now, what you can see here is this is what I was saying about the 1275 being centered in. And then if we go around one revolution, our 360 degrees is here at 1283. Now, you may be saying, hang on, that's not 360 degrees. 360 degrees should be out here. It's one of the vagrancies of the square of 9 in that as we're going, we're starting here and we're rotating around. This is considered a full rotation. That error is, which I think we could call between this point and that point, becomes less and less significant as the numbers get bigger and you get further away from the center of the square. That when you're right up close to the square, it can sometimes really throw you when you're thinking, what's going on? This doesn't look like being 360, yet that's the value I've got. So the 1283 here, and we can come and look here and we see 1283 for our 360 degree line there. And then also, if we continue on, so we go into the next revolution and we continue on to around 180 degrees, we can see here the 1.2905, and these are our values in here. Obviously, again, the formula becomes a lot more accurate, and that's the advantages that we have with our modern computers. So you can see that it's useful. You know, with the starting the price at the center of the square, where that is used most is on intraday charts. And the reason for that is that with intraday, you're often looking for much smaller moves, and so it makes it a lot better to have our turning points in the center, because then we're starting to get these angles and these important numbers come up a lot sooner than if we had 1275 way out at the extremities of the square and we're waiting for like a 500-point move before we would get any sort of change. All right. So that's dealing with the price. So what we've covered is just the static numbers and their relevance to the market. We've looked for turning points at the extremities of the square and the relationships as we move around the square of 9, and also putting a price in the center of the square of 9 and how that changes the whole dynamic of it as well. But the next section that I'd like to cover is the square of 9 in time, because whilst we've done all our calculations with price, we can do them all with time as well, and it gives fascinating results. Now with time, there's actually two different ways that we can deal with it. The first one is actually that ring. You've seen on these graphics that we have of the square of 9 is there's a date ring around the outside, and that's a very interesting way of just doing some really simple analysis. So let's just have a look at this case example, and this is coming off the high of the Dow and the S&P in October 11, 2007. So what I've done, so in any plastic square of 9 or in a program like Market Analyst, you can drag this up and down. I've centered the October 11 as our starting point, and then from there what we do is we go around looking at the 90 degrees. Now you can see this blue cross, the cardinal cross I've just put on a squares overlay, square meaning 90 degrees, and so I can go searching for those dates. So as we move around 90 degrees, the first date that we find is the January the 8th, and so that's the one here. And we'll keep moving around, and we've got April the 8th and July 11. Now, an interesting thing again with the square of 9 is that these dates, so these 4 dates, which are the cardinal dates based off that major high that we had in the market, are going to be significant for a number of years to come. Sometimes their influence is counteracted by other things that are going on in the market, and I've seen it where in the first year they have very little effect, but in subsequent years they can be very important. And so it's really just looking at it and looking at the examples and just being mindful as these dates are coming up. So here's an example using the S&P, starting at that 2007 high. And what I've got on this one, I just need to refer back to my notes, is the 90 degree lines are red, so the cardinal lines that we were looking at. And yeah, so here's an example. So here's our first one, January 8. There's really not much happening there. The market continued down, and when you zoom in, you see there was a little bit of an uplift there and then just went on its way. But as we keep going, you can see that here, and then the next one, so this was January the 7th, is the equivalent angle, you can see is a lot more significant, being the end of this little run up from here, and then the continuation of the downward market. The other lines we have there, the green ones, are 120 degrees, so basically a triangle around the square, and looking at those angles, you can see again that there are a number of ones which are of mild significance, and then the 30 degree. And this is the one that amazes me, is that a 30 degree line coming off that square, basically, within a day or two, was on the bottom of the market. And so it's, again, to reiterate what I said before, how do you know in advance whether it's going to be significant or not? You just don't. All it's doing is it's giving you an indication that, hang on, there's a day coming up here which has a mathematical relationship to a previous major turn in the market. So let's watch out and be ready in case there is some sort of change of trend happening. Another example, ExxonMobil, just running around the dates there. Again, these are just 120 degrees from the high in February 2011. And again, it's just another example of seeing how these just correlate with changes in the market. And sometimes it may not be a change, sometimes it's just like a crazy day happens. And that's why, again, I really try and tell everybody, just because the market does something crazy on a day where one of these dates comes in, you've got to wait for the confirmation. And if we waited just one day after, we would have had a higher bar, which is our green bars here, and we would have straight away known, no, that's not a change. It's going to continue on. All right. So that's looking around the outside, using that ring around the outside of the square of 9. But what we can also do is what we did with price is that we can center the time in the middle of the square, and then do our calculations from that. And it's actually with some level of embarrassment that I have to say that I didn't realize that I didn't have a tool for this in Market Analyst. So I had to use one of our manual calculators in the program to do this. So that's why you'll see over here that I'm writing these all out as scripts. But that's probably good because it lets you see how I've been calculating all of these. I think in one of our free updates coming up, we'll be adding a number of time-based square of 9 tools just to make all of this a little bit easier. What we did here, so we're taking IBM 1st of April in, 3rd of April in 2012, and we're putting that date in the center of the square of 9. And then from here, you can see these calculations. I'm just saying, well, let's do a square of 9, 1 revolution out. And you can see 1 revolution out was the end of this run up from here. Now, remember, our square of 9 starts with 1 in the center, goes around 9 to do 1 revolution. If we count the bars, we've got 1, 2, 3, 4, 5, 6, 7, 8, 9. So we've got 9 bars there, confirming that this is 360 degrees in bars. And then we can look here, we can see these next couple of turning points, and again you can see how amazing these are at highlighting days of changes in market. Now obviously you can see by my calculations here that I'm not showing everything. There were some in there that didn't have some results, but they definitely there is a lot there. So you can see here we've got 90 degree, 270 degree in the second revolution and 270 in the third revolution, and you can see how they've resulted in these marks, in these dates. There's a question just coming through of, do these number spirals, do they have any relation to the Fibonacci spiral? Not quite. The Fibonacci expansions, obviously at the 1.62 or thereabouts. Mathematically, I think this is different, but I haven't actually confirmed it. So I'm just a little bit of hesitation there. But nevertheless, the principles are the same. So you do have this expanding and contracting, but it's a different value than Fibonacci. What is of interest on this chart is to look at the time control. So you can see this tool lets me say, based on my starting date, I'm going to do this calculation. It's a timeline, and I'm doing it in bars. So we're ignoring weekends in these calculations. What I've done on the next slide is just change, I use the exact same numbers, but just change this to be calendar days instead. Now immediately what's a standout is this April 23 low. So you can see here that our 270 degree on the second revolution, and if I go back one slide, our 90 degree on the first revolution are both hitting that day. Again, what we've got is a confluence of multiple calculations coming in on one day, which is extremely important. And so we know that this is a day that we have to watch out for. And to view that day, so here's the day, the 4th of April, and you can see that as we're moving around, going into our second circle, so on our second revolution at 270 degrees, we have April the 23rd, and that's where this line here comes from. All right, let's have a look at the next example. Google, same type of principle. We're using 90 degrees and 270 degrees from the 26th of July in 2011. And this is just repeating through the first, second and third revolutions around the square. And again, you can just see some interesting lines. I mean, some like this. I mean, obviously, yeah, there was a change there. Here it caused almost what I would call a disturbance in the trend rather than a changing trend. But they're just points here, it's done nothing. And there are many lines that will do nothing at all. But again, we would be watching for it and then waiting to see what happens. All right, so now we're coming to putting it all together. The golden rules, if you like. This is what I would say to anybody considering any type of Gann technique. Now, what I've shown you obviously is one that I think a lot of, but I think there's some rules that have got to be said, and that is never to adopt a new technique without testing it. You've got to know, you've got to have the confidence if you're going to put it in. Don't neglect what's been working for you in the past. It's one of the things that I find most frustrating when people come into Gann and they think, great, I can throw away everything else and just exclusively use Gann. Some of the best Gann traders I know around the world will still use oscillators, they'll still use momentum, and they still have this confirming well, we call it standard technical analysis, but I'm afraid that sort of belittles it when that's not the intention. There are some powerful momentum-based technical analyst techniques that are working. Don't neglect them and just exclusively go to Gann and wait for the confirmation of the change in trend. As I said before, these things don't work all the time. Build a case. When you get one tool and you put it on and there's a line, yeah, that's interesting. But what you really need to do is start adding other lines. Calculate from other turning points in the market. Do you start seeing confluence? Because if you do, then they're the prices you need to watch. Now, programs like Market Analyst put in clustering tools which allow you to even hide away all of the actual tools, so your chart's not inundated with thousands of lines, but they just give you the summation where there's overlaps between lines, and that makes it really easy to do that. All right, so further information. This is what I was saying. There's two people in particular who I would recommend if you want to know more about the square of 9 and different Gann techniques. One of them is the MTA's own Constance Brown, and her web address is there at aeroinvest.com. And the other gentleman is someone out of Australia who is Alan Oliver. That's his website there, tradingwithgods.com. Don't be put off by his website looking a little bit amateurish and a little bit salesy. He's actually probably one of the people who I think in the world has a really, really good understanding of the square of 9. And for his students that I think buy his $700 course on it, he actually puts out weekly video blogs explaining every week a different setup and how you use. So not only are you getting the material right up front, but the material just keeps coming. And if you're really interested in this, it's a fantastic resource. Just a couple of slides here on our product, Market Analyst 7. Now I've been using 7.1. So if anyone's out there on 7.0, there are a couple little differences, but 7.1's coming out soon. Hey, we're a company, we love technical analysis. We don't just do Gann. There's a whole wide variety of different types of techniques, from statistics and dynamic market profiles and all sorts of things that we'll do. But of course we have all the traditional technical analysis, back testing. We're even doing three-dimensional work, trying to see what we can do with 3 dimensions over 2, and are there some advantages that we can get out of the market. Obviously a modern, easy-to-use interface with multi-touch, simple report publishing. If you need to publish reports and charts and notes, we've got stuff built in our new 7.1 that's coming out, which is going to make your life a breeze. Supported from the USA. I'm sitting here in Charlotte, North Carolina. Our main office is still in Australia, and it's giving us almost 24-hour support, but early next year we'll be opening an office in Europe, and so we're getting 24-hour support just as we continue to expand and grow. And most importantly, we continue to be developed by a dynamic company. You know, we believe that Market Analyst is a fantastic product, but we ain't finished. There's a lot of dreams that we have, a lot of ideas that our clients have been coming to us with, and we're keen to develop. And so, you know, I would say to anybody out there, if you've got ideas on different technical analysis techniques, different charting techniques, talk to me. I'd love to know about it. I'd love to work with you on seeing those ones come to fruition. So, finally, the MTA offer. Any MTA member that goes to our website, listed down there at mav7.com/MTA, and if you look at it and you decide, hey, this is a product that I'd like to get, there's a 20% discount that we've got on if you order it before September 30 of this year. Again, even if you're not really interested in buying it, what I would encourage you to do is register for a trial. Download the software, have a look at it, try these techniques. You can try these techniques for 14 days in a trial version and see how they go and try them on your own markets. See if it's something that gels. Because if it does, they're great techniques to add in to your trading toolkit. And that's it. Thank you so much for listening. There's a couple of questions that I'll deal with now. Let me just scroll back up in here. Is there a way to lock the chart to hold a perfect one-by-one grid? Yes, there is. I can't really show it to you here. Let me just jump back to a chart. You see this little lock down here? This is what we call this our geometric lock. And this is particularly for people who are doing geometric tools. What we can do is when you set up a chart, you can lock that, and then you can zoom in and out, scale back and forth, but the X and Y will not change. And so they stay completely locked. Now, if I wanted that to be one by one, I would actually just type 1 in here, and then that would stay as a one-by-one chart. All right, next question. Are there general guidelines to what price factor to use in the square of 9? I guess the general guidelines that I would use is starting looking at the numbers. So the Dow Jones trading at 14,000, I'm looking at 10 or 100. I'm trying to bring it back because if I left it at 14,000, it's a long way around the square before we're going to come back to 360, and I could be missing a lot of turning points. And so we're trying to bring it back into something which is usable there. But this is what I was saying, where it becomes half art and half science. There's just a feel that you get. The more you do this, you get to get an idea of what markets respond to what price units. A question from Stuart. Where is start 2 on the Euro chart? Around slide 28, 29. Let me jump back there and see if I can find start 2. I'm sorry, I don't really understand the question, so if you can put that in again, I'll see if I can answer it. Otherwise, just email me and we can do that. Oh, start 2, I see, on this one. Okay, start 2 is here on the bottom. So what I've done is on this chart is I took the 3 successive bottoms and they were my starts going up. And you can see here how even this one must be at 45 degrees has offered support in there. Can you comment in Gann dates, August 8 and September 23? Key Gann dates. So there's a question here about key Gann dates, in particular August 8, September 23. They're more seasonal dates. Now, obviously, one of the things that Gann was talking about was on the key days, so the summer solstice, the winter solstice, the equinoxes. These are really interesting dates in the market. And if you do a study and you go through looking at different charts, you'll see that quite often there is major turns. But the key word there is quite often. It's not a guarantee. It's not guaranteed that when these dates come up that the market is going to turn. Sometimes there are other prevailing influences which are having a much bigger effect on the market, and these things can't affect it like maybe they would in other circumstances. Have you constructed date rings only using trading days? No, we haven't. And it's interesting because as I was preparing this presentation, I've actually made a note to do that work because that came up in my mind as well. Question 6. Do you use the Gann Square formula for calculating support and resistance by changing the plus sign to a minus? Yes, that's correct. So where we had the formula, just jumping back to here, the plus is when we're expanding or increasing going out from the center of the square. The minus is going to bring us back in. So if I start at the top, my calculation is using minuses because I want to come back down. Whether that becomes support and resistance more, obviously a line that is support one day when the market is above it can become resistance in the future when the market is traveling back up towards it. Can you comment on the Gann fan tool? I can. It's a little bit out of scope of what we're trying to talk about. I mean, obviously, the Gann fan tool is this whole concept of one by one. Again, you start using Gann fans in conjunction with squaring, and you'll find some very interesting intersection points. Can we get live data from outside USA or Australia? You can get live data in Market Analyst from Interactive Brokers, eSignal, IQ Feed. If you're an institutional trader on the institutional version of Market Analyst, you can get Bloomberg. So there's a whole variety of live data sources that can be used, and so these techniques can be used on. And that's all available in the trial as well. Does it support Forex futures as well? It does everything. So we've had a couple examples there of futures, Forex with the Aussie dollar, the US dollar versus the euro. Also, we had an example there of the S&P 500. Now, I could equally have done that analysis on the underlying index future rather than the cash market. It all works the same. And you'll find these examples. Gann, in all of his work, was mainly focused on commodities, so corn, soybeans, wheat, and there's countless examples of his books in doing that. Do you ever trade where it is not a confluence of levels for a price level or date in the market? Yes, you can. Let me just find an example. If I had one line on and I saw the market bounce and pull away, remembering what I said that you are looking for a confirmation in the change of trend. Once I get that confirmation, then it's saying, hey, the market is respecting this line. This is a tradable change in trend in market. Obviously, the more lines I can put there, the greater the confluence of that, the more confidence I have in that being significant. But really, that also comes down to what sort of size you're trading. If I was putting 100 contracts of the S&P on, I would want a lot of confluence knowing what I'm doing there. But if I'm just trading a single contract, then I may be happy to trade off a single line like that. It really comes down to partly your risk and money management rules as well. And okay, so look, again, I just want to thank you all so much for tuning in and listening to this this webcast. It's been a pleasure to present it. It's a very wild area of technical analysis, and if you've never seen this type of stuff before, it can be quite daunting. But it's a wonderful area to study, and I think, like most people that get stuck into Gann, once you start, there are just all these extra levels to uncover and dig around, and it's just an area that I love, and I hope that this has been of benefit to you, and thank you again so much.
And on behalf of the Market Technicians Association, I'd like to thank you, Matthew, for spending some time with us today and for giving such a spectacular presentation. For those interested, this webcast will be made available on the on-demand video archives and in the MTA knowledge base before the end of the week. I do encourage you all to visit the Market Analyst website and take advantage of the limited time offer that Matthew graciously extended to us. Market Analyst has been a longtime supporter of the MTA and sponsor of the symposium over the years, and they truly do have a remarkable product. If you have any additional questions we couldn't get to today, please feel free to email me or another member of the MTA staff. We'll gladly pass your questions along. Thank you all for attending today, and I hope to see everyone next week as Kingsley Jones joins us from Australia to present Mind of the Market Average, the Fundamentals of Investor Sentiment. Thanks, everybody. Enjoy the rest of your day.